Now we're joined by James Rickards. He's a New York Times best-selling author. He's the man behind the book, The New Case for Gold. We're so excited to have you here, James. Thanks for joining.
Thank you. It's great to be with you.
All right. So, well, first of all, can you tell us about this book, The New Case for Gold?
Sure. Came out in 2016, but it's still very timely, very fresh. I wrote it because I've been speaking about and writing about gold for a long time before I wrote the book. And I kept hearing the same things over and over, and they were all wrong. So I said, well, you know what I'm going to do? I'm going to write a book. I'm going to lay out the facts. And then if anyone ever asks me, I can just say, hey, read the book. But just on a serious note, for example, people will say that you cannot have gold as a monetary standard because there's not enough gold. Maybe there was at one time, but now with all the money printing, et cetera, there's not enough gold. That's nonsense. There's always enough gold. It's just a question of price. Now at $1,700 an ounce, that won't support modern commerce and money supply, but at $15,000 an ounce, it will. So if you get the price right, then the gold can support the monetary system, which is actually part of the predictive analytics of saying that as confidence in money is lost, the price of gold must go up. It must approach that $15,000 level. People say that gold supply doesn't expand fast enough to keep up with economic growth. That's not true either. First of all, gold supply does expand about 1.6% per year, which is a very moderate level, but it's good. That's sort of consistent with the growth in developed economies, a little bit less, but close enough. But it misses the point that the official gold is 35,000 tons, but all the gold in the world is about 200,000 tons. So wow. Central banks and monetary authorities can just print money and buy gold. You can always get more gold. You don't have to mine it. You can just buy private gold. You know, John Maynard Keynes called gold a barbarous relic. He never said that. He used the phrase barbarous relic to talk about a messed up gold standard in the 1920s, but not about gold itself. Anyway, there's a long list of things that people say. They're just wrong. Economists say it. Central bankers say it. Actually, everyday people seem to have better common sense. I knock down every one of them and make the case that you should have gold in your portfolio.
Wow. Well, and I think it's so interesting that you say that you can always find gold. Obviously, it's something you find in nature. I mean, can you kind of compare it to oil, that you can just always find more in nature? Or will it at some point just run out?
Well, I guess at some point it might, but it's always a question of price. There's gold out there, but if you have to dig deeper, dig further, if the ore content is smaller, it's going to be more expensive. So guess what? That's why the price of gold rises in accordance with economic growth. It's almost like a natural equilibrium. It's hard to compare gold and oil in the sense that oil there are like 75 grades around the world: high sulfur, low sulfur, et cetera, viscous, thinner, thicker, et cetera. Gold is an element. It's atomic number 79. It's just gold. You don't have to debate about whether this is good gold or bad gold. It's just gold. As it's also very scarce. People talk about rare earths. I'm sure you've heard the expression rare earths. These are certain minerals used in electronics and military applications that are hard to find. Gold is more rare than rare earths. Rare earths are called that because they come in very low concentrations, but gold is actually more scarce. So no, it's not easy to find. You can find it, but it costs a certain amount of money, and that's why there's an equilibrium between the dollar price of gold and the value of the dollar itself in terms of other currencies.
Mm. So then how about if you compare it to cryptocurrency or the normal thing to invest in, stocks? I mean, why should people invest in gold instead of that?
Well, a couple of things. Stocks and cryptocurrencies are two completely different things, so they're different comparisons. What I say is, people always kind of want to put words in your mouth, and they say, well, Jim Rickards says sell everything and buy gold. I've never said that. I do recommend buying gold, absolutely, but about 10% of your portfolio. You don't go all in any asset category. I don't care if it's Bitcoin, stocks, gold, real estate. You never go in 100%. So I recommend a 10% allocation to gold. That gives you the other 90% of your portfolio if you want to buy stocks or real estate or bonds or commodities or cryptocurrencies. I don't recommend cryptocurrencies, but I'm not. If you want to buy them, knock yourself out. It's fine. But I personally don't invest in them. But the point is, I recommend gold for about 10% of your portfolio. But most institutions today are about 1%. So or less. So even if you went from 1% to 5%, there's not enough gold in the world at these prices to account for that kind of portfolio shift. So the price of gold would skyrocket.
What kind of trading strategy would you have once you buy gold? Is it just the long term, just to sit on the money until it goes, well, gold rather, until it goes up, or?
Yeah, in effect, I'm not a day trader. I am an investor. I do, as I say, write books and newsletters offering financial advice. I've been in the hedge fund industry for 20 years, so I know about the investing side of it. But for everyday investors, I recommend, buy some gold. I recommend physical gold. There's a lot of so-called paper gold. So you can buy, ETFs or gold futures or gold contracts, et cetera. But I remind people, those are paper contracts. And if the seller wants to terminate the contract, just send you a check, but you're out of the trade in terms of, you say, I didn't buy the gold contract for today's price. I bought it for tomorrow's price. And they say, sorry, closed out, here's your check. But if you have physical gold, that can't happen. So I do recommend physical gold. You can buy it in coins, in bars. There are a lot of ways to buy it. It's not that difficult.
Even
a lot of
jewelry, maybe?
Well, jewelry, absolutely. No, seriously, jewelry is.
Jovanka, I love that.
Well, when you look at official World Gold Council statistics, they break it out between bullion, industrial uses, and jewelry. I go, no, jewelry is wearable wealth. I mean, you might make a nice necklace or bracelet. You look at an Indian bride. An Indian bride is just adorned in gold chains. Well, it looks pretty, but that's her retirement money to buy a house, her children's education, her parents' health care. She just happens to be wearing it around her neck. So jewelry, to me, is just another form of bullion investing, except it looks pretty.
Yeah, right.
What was it that first attracted you to gold, James?
Well, it's interesting. I got a graduate degree in international economics, and I was the class of 1974. But that was the year that the IMF officially ended gold as a monetary standard. It used to be, if you joined the IMF, a country joined the IMF, you had to put up part of your account in gold. They got rid of that. Of course, 1971, everyone remembers the United States terminated it used to be if you ran a trade surplus with the U.S., if you were in Norway or France or any country and you had a surplus, you could take your money and cash it in for gold. And the U.S. used to have to give it to you. They terminated that in 1971. But my point is, I was the last class that studied gold as a monetary asset. I had a very good grounding in it. After my year, if you're younger than I am and you know anything about gold, you're either self-taught or you went to mining college because they literally have stopped teaching it in academia. So I've been following it, studying it, et cetera, for decades. But we now have 2 generations of economists who know nothing about gold.
Fantastic. Well, James, actually, the next round is about to start. This was so interesting. Thank you for joining us and teaching us some more about gold.
You're welcome. Glad to help.